Hello everybody, welcome back. Let's get stuck into the charts then, shall we? Starting off mostly with Bitcoin. So yesterday we were all worried that we were going to get a rejection on this descending triangle formation. We broke out basically, so it is a clean breakout. We didn't get the full measured move. The measured move would have taken us down to the 200 or 200 simple or exponential basically. And we haven't got that yet. So I'm not saying they're not going to get it, but it doesn't look like we're going to get it this time. It might take the next swoop down to get it. So we're still targeting these eventually, and maybe even lower. But right now, I don't think we're going to get it because there's more evidence to suggest that it's going to keep trending up. And like I say, this is a technical breakout now. If you go over to the daily time frame as well, this was ever so slightly, kind of still is. We'll just have to get right in there to see it because there's not much between it. So it's tight, but it does look like it's the highest candle body of all time. So, but again, you can stick a Rizzler paper between it, and it's difficult to really say. But it's still bullish. You know, it's bullish until proven otherwise. We're above all moving averages, above the Bollinger Band. In fact, it's the 21 exponential that caught it yesterday, and I suppose that counts for a lot because the standard practice would be 65% more likely to remain above that portion of the band, and that's where we are. Same thing over here, broke above it, retested it, and up and away. So yeah, fine. It looks like it's good to go. Surfing that 7 simple moving average on the 4 hourly as well. We've also got a pump signal that's generated right at the top. So I think that we're going to I'm pretty sure we're going to make a measured move up to these tops over here, which again is only a $3,000 move. And look, just to put it into context, this is only a $6,000 move. It's not an enormous move, $7,000 move in the context of the price. But it's not about how big it is. It's about the structure and the relationship for continuation, and that's basically what we've got. Ethereum also doing really well. Where's Ethereum gone? Here it is. Ethereum's trending back all the way up towards its major resistance. And again, this resistance is a big deal for Ethereum as well. If we go over to the weekly, you can see that was the local high over here, double topped over here. But look at the state of that. That wick tells an enormous story. The buyers are in. Now, as well as what was happening with just general price bouncing yesterday, the difference between a dead cat bounce and a breakout really, I think, got pushed over by the CPIs. This is what I was referring to in yesterday's video, saying I have a method. It's not perfect, but my method of tracking CPI before it prints is oil prices. And if oil is lower highs, lower lows, then CPI is likely to be, on target or maybe even lower than expected, because basically oil prices they filter through onto everything, food, fuel, and everything. Everything requires oil in one way or another, and so higher oil prices basically is higher inflation, and it is lower oil prices until today, actually, where we've seen a bit of a breakout. To be fair with you, and so yeah, we got that print. CPI saying, well, they got it on target. So inflation's still staying static now, and with that, price sort of got that little bit of alleviation that it needed. Same thing with the stock market. Stock market's doing the same, and the only thing that is cooling off right now is gold. But even gold, silver, they're all moving up as well. Like I say, I've been pretty bullish on silver. We just haven't got the correct entry point for silver, but we're pretty bullish on it. What else? Yeah, the Dixie, of course. The Dixie was moving up yesterday, and it's still moving up. So with this, it adds a little bit more of I wouldn't say a problem. Still think we're going to move down on this. The general idea is that we're going to trend down slowly but surely for about a year, or maybe even a little more. But over this next 12-month period, sort of find our way back down on the Dixie. So I like everything that I'm seeing. It's more or less confirmed. The CPI, like I say, pushed it over the just over the line, just enough for us to consider it to be bullish. But there's one thing that we all need to think about, which is when's it going to end. And we don't really know when it's going to end, but we still have the bearish divergence here on the daily for Bitcoin. We will likely get another one as well. And with that, the weekly still has the bearish divergence as well. We can't escape the idea that bearish divergence normally sort of gets us closer and closer to at least a local top. But until then, where are we going to measure these things out to? Well, just as we had the measure move on the way down, which again, was front run, we can do the same measure move to the up, and now we've got the breakout here. What is the technical target of that? So we'll just extend this. This is measured from the mouth, and we'll just measure it to the breakout. It takes us to roughly, I don't know why I'm looking at it on such strange time frames. Let's go to a 4 hourly. The measure move on this after this breakout takes you to roughly around 106.6. So that's kind of where we're looking to see on this one move, really. So beyond that previous high, and then a little higher than that. So around 106.5. That's kind of where we should be targeting this. With Ethereum, it's definitely going to be better than that if we break this resistance. 4,100, once that's broken, we probably should be thinking about targeting the previous all-time high, so another $600 move, and see if we get continuation on that. But it all looks quite good now at this point now, so we'll know if we're wrong as well, by the way. We'll know if we're wrong because we'll start to see 99,000 close below that. So, and yeah, we can hold all the way down to like 96,500, but once that's closed below on a daily body, then yeah, it's kind of over. It is kind of over. So the bounce on most altcoins has been pretty significant. They've not gone back up to where they started from or where they fell from. They may not, because Bitcoin might be doing this, but other coins are still a series of lower highs. So we've got to think, all right, what does that mean? But look, we have, for XRP, for instance, lower high, lower high, lower high, lower high. So it's basically just trendy. It's just a normal, natural consolidation. Every altcoin is going to have its own chart that you could look at for breakouts, and for XRP, breakouts around 150 should take you back to where we came from and beyond. Every altcoin will be able to tell you a particular story. One last thing we'll check here is the dominance chart, which is getting clean rejections now below, and it never closed above actually the 20 moving average since this breakdown. So 20 moving average, 21 exponential as well, down, 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 down. And if we go to the 4 hourly, it's more or less the same story. We had the death cross and we had a death cross retest, and now we're down below all moving averages. So odds are in favour of continuation across the board, I would say. Keep your eyes peeled on Bitcoin for your main indicator. If Bitcoin comes down, everything else is going to come down. Obviously, we've seen how dramatic it can be at this point, but I think I think everything's got a chance now to continue with this rally. As long as Bitcoin is above that 99. Then with that should come good things, and Ethereum above 4,000, things will get really good. In fact, based on the dominance chart at that point, with that kind of significant volume, you're probably looking for it to come down to around about 46-47% dominance, and then maybe even lower than that. But one step at a time. This is a problem. This will be a big deal around 53. And then once 53 is broken, it would probably go down to the mid 40s. Right, that will be that. Let's wait for more appropriate entry points. Let's not go crazy. Let's not just throw all your money into altcoins just because on this very moment it kind of looks okay. Still wait for entry points. Buy supports. Don't FOMO. But supports will be given to us, and that's for us to take advantage of. Depending on your risk tolerance, depends on which support you decide to pick up from. I didn't pick up from any of those on that dump down. My risk tolerance is extremely high, or should I say extremely low. When we have money flow indexes across the board still above these overheated reads, for me, thinking about what took place in November, I'm quite pleased with that. Not looking to overexpose myself around these periods, because the warning signs for me are still there. The risk to reward has to be appropriate. Hodl bags are a different story, obviously. This is why I'm always saying, and I've said since the summer, that the hodl bags will remain my biggest trades throughout this period of the market, all the way through to next year. From a trading perspective, really not looking to overexpose myself. I'd much rather wait for a better entry point. That doesn't necessarily mean it has to come from lower. It just means it has to retest support with a golden cross on a 4 hourly or a daily, something along those lines. I'm more than happy to do that because the risk to reward is more acceptable for me. But that said, does look like it wants to go up, and it probably will. So 106, maybe 108. And see where we go from there. Right, thanks for watching. Hope you have a nice day. Take it easy.